What's going on, guys? Happy Sunday. Happy Sunday. Just gonna get started here. Let's get some folks in here, guys. What's going on? We'll get started in a couple minutes here, just launching up here a couple minutes early. Hope everyone had a nice weekend. Crazy week of trading last week. I'm pretty excited to discuss this week, go through some TA stuff, and go through our session, sort of. It's going to be about 45 minutes if you guys are planning time. About 15, 20 minutes for Q&A, which is, I know folks love the Q&A sessions. We've had thousands of positive feedback from these sessions, so I'm pretty excited to go through all that. But it's going to be a quick session today. I know people want to watch football and stuff, and it's Sunday, kind of one of those lazy days to relax before probably another crazy volatile week coming up. But we'll chat in a second, just get everything launched up on social here, and we will get going. What's going on, Mike? What's going on, Aventador? Allie in the Bay, first time here. Oh, congrats. Thanks for coming on. Hopefully, I think you'll probably learn a ton. Appreciate the subscribe. Thanks for coming in. Get started in a minute here, guys. Usually I like to start when we get to like 100, 200 people, but it's Sunday, so I don't know who's going to be joining, but let me just quickly post. Live now. Going to be a great session. Okay. Awesome. What's up, Kadone? What's up, man? Howdy. What's going on, Warthog? How are you guys? I see. Okay, people are starting to trickle in now. Be a great session. I like to get pretty deep with some stuff. I know a lot of people don't sort of take the time to walk through the actual trade process or, what I'm seeing and, what I'm updating in real time. So Friday was a really good sort of teaching standpoint day. There was just sort of a no bounces all the way down, and there's all technical analysis, and that's sort of how it played out. So it was a pretty easy trading day in terms of where things were going. I'm going to talk through some of those examples. Awesome. What's going on? Julia, Sooner, Martin, Leonard, how are you guys? Thanks for jumping on. Let's give it a minute or two to let some folks jump in. Let's quickly post here. Live now. One sec, guys, and we will get going. Awesome. There we go. 50 people coming on. Great. Happy Sunday, guys. For those just joining, quickly go to stock twits here and post there. What's up, Gilby? Awesome. So I'm going to kind of just give a quick intro. It seems like there's some new people here. I'm Spud here. I run Spud Zone Discord. You could follow me on Webull. I'm the most followed trader on the Webull application globally with 54,000 followers. You can follow me on StockTwits. A little over 25,000 followers there. I try to post all my time trades and stamps and everything in real time as best as I possibly can. These markets move pretty quick. But I'm a retail trader. I trade my own money. I don't trade for fun or anything like that. So these are just my trade ideas and what I'm actually looking to trade by the minute, by the day, by the week, by the month. So you can follow me on those social media outlets. We also have a Discord, an awesome team of options traders, awesome team of small cap traders, as well as some great teachers and sort of coaches in there as well who do tutorings and a lot of things you'll probably see in today's session. I thought for today's session we cover three things. I know we try and do these sessions once a month. And we had an awesome session last time. I think it was we had a record amount of viewers live in real time, and we had a record amount of QA. I don't expect that today. It is Sunday, so people are busy doing family things, watching football, whatever it may be, just resting for the big trading week coming up. But I thought there would be an awesome opportunity to go live today because there were some really interesting, great teaching points from Friday. And I think a lot of new traders can sort of really take notes with pen and paper here and really understand and sort of get a feel for the three topics I want to cover today, which is one, being the price action. And I'm going to talk through that, followed by sort of entries and stop losses. And these are going to be particularly for large caps. I'm going to go through large caps. I know we've done a lot of sessions on like small caps and price action, things like that. But I think it's also essential to understand how price action may look in terms of options or just shares alone in a large cap or index or equity, whatever it may be. So I'm going to walk through some of that. And then I'm going to leave about 15, 20 minutes for Q&A. And so that will be today's session. So give it about 40 to 45 minutes or so. I'll try and get you guys out of here quickly and be super efficient as I always try and do. And so the Q&A session is actually going to happen within the sidebar on YouTube. And I'm sure I'll have a tech team sort of writing things on the side. If you guys need help, I'm sure he'll be able to hop in and help in and out. So awesome. So really appreciate you guys jumping on. Hopefully everyone's been trading, pretty well, or just being able to navigate this market. It's extremely tricky. Even if you're a professional trader, if you work for, people on the street, you work for a fund. I know I have many connections on there, and it's really tough choppy waters right now. No one really knows what's going on. It's a lot of algorithmic. It's crazy volumes up and down, big overshoots, big overdowns. I mean, we got China issues, we got the Taiwan stuff, we got the Russia, Ukraine. We have the Feds raising rates super fast. We haven't had any rate hikes in about 15 years. People don't really know how that's going to affect the market. But guess what we have? What we do have for a competitive advantage is we have charts, guys. We have yearly charts, weekly charts, decade charts, and there's a lot of things that you can study out there to give yourself a competitive advantage within the marketplace itself. And so I'm going to talk through some of these things today. Specifically, I wanted to talk through a quick update on the SPY. For those who don't know, S&P 500, SPY, basically the Fortune 500 companies. And this is an index that basically you can monitor for everything. And I always have the SPY chart up no matter what time of day, no matter what time of night. I'm always looking at it, whether it's futures, whether it's during the day, because this gives you an understanding of where we may be headed the following day, where we may be headed intraday, by the minute, by the hour, by the week, by the month, etc. So, last time I think we were on this on the line here, we pulled out the weekly chart, and I still have my bars here. And, I said, I think when we were at 390,400, my next targets were 370, followed by 350, and then 330. So we've actually hit two of the targets within a month, and 350, and we had a big technical bounce off the 348 on Thursday morning. After that hot CPI number read for September, when everyone thought it'd be lower, gasoline, commodities, everything was getting shot down. And we actually had a still really hot CPI number, which is pretty frightening because this number does not seem to be going down over the last few months, which then obviously had investors thinking the worst, thinking the Fed's going to continue to raise rates. And so we had an overshoot down on Thursday, and then followed by a really, honestly, probably I don't think I've ever seen this in my lifetime, a full reversal from red to green, but a vicious 1,500 point move on the Dow. The NASDAQ, I think, was 6 or 7% from bottom to top. You had options contracts running 2,000, 3,000. So the SPX was running 10,000, 20,000% in one day. I mean, these moves were just unbelievable. I don't think I've ever seen moves like that on an index within a one-day period. Usually you make it a bounce the next day or fail the next day, rejection, whatever it may be. But anyway, the support lines for me on the SPY continue to be the same. So as we go lower by the month, I'm going to continue updating these price ranges. So the next SPY I think I really like, where I think you're going to get some demand, guys, is this 325, 330 level in here. And that's going to be right in here. So that's where I think we might be headed to. You had a nice bounce on the techs on a 340, 350, which is about right here, right? Now, everyone's calling for this 330. Why are we calling 330? We got the double top. Bing, bing, bing. It's actually a triple top here. You might call that a triple bottom. I call it the triple top because actually this was the top before we dropped for the COVID 2020 smash. And that is where I think you'll see the first demand zone come in for a possible short-term 5-10% bear market rally. You have big bear market rallies. You've seen them this year, 10, 15 vicious rallies to the upside. And then they, days later, they get shot to new lows. So, if you're a trader in this market, I'm not overnighting anything. I'm very much scalping by the day because as you saw Thursday, things exploded. And then Friday, everything fell to the ground. And that's how fast this market's moving. And if you're not moving fast with it, you're gonna get stuck. You're gonna get left behind. And that's why we teach sort of entries, exits, profits, where to stop loss out. And, technicals are really everything in this market. So I like SPY 330. I think that's a nice demand zone. Under 330, I like the 300 level and then the 280 level. And this would be a big demand zone spot if we get to 280, 290. Now, I don't know if we're going to hit 280, 290 or 300 or even 330 this year. If we get it overshoot into a deeper recession, maybe next year we might hit those levels. Or if maybe something drastic happens in the world or the economy or something goes under or something breaks, maybe we get a panic capitulation day down to 300 or 280, maybe. That would be a 10, 15, 20% move from here. So it could happen. I don't think it's likely maybe this year, but maybe next year we can see those levels. Do keep in mind, right? We've been on a 2-decade run on the SPY. So when you look at the bigger picture on things, right? I mean, from 2009 on the triple bottom here, We're about at $62 a share on the S&P 500. We're now in the 300s. So you keep in mind, you bought at 50, 60, that's 120, 180, 240, 300, you're up 500% in about 13 years. That is a big, big percentage. So we're still in that technical bull market phase. Yes, of course, everyone's gonna be like, well, what do you mean it's a bear market? Yes, it is a bear market this year, but if you look at the past couple of decades, we're still in this zone here. And I would say until we break below maybe 300, and if we wouldn't bounce from 300, then I would say we're in a full-on sort of scary bear market down to the 200s. But as this is multi-decade view, right? So, we're still in that, I would say, cyclical bull market in here. Until things break down, if they ever were to break down. But we could hang around here for a couple more years and we'll see what happens. But that's a bigger picture sort of thing. And I want to really talk through, that was just a quick update on the SPY. I want to really talk through this. I want to get into price action, guys. What I mean by price action is today I'm going to compare the QQQ, Friday's 5-minute chart. So if you're a new trader, I love to trade the 5-minute chart. Why do I trade the 5-minute chart? I also love to use candlesticks. For those new traders who don't really know how to get set up, I use candlesticks, candle bars, because it gives me a really great understanding of how drastic the selling or the buying power sort of is within a particular tape on an equity or index. And what I mean by that is that you can really get an understanding of the depth of how strong the selling is or how strong the buying is on a particular day. And so what I like to use is a 5-minute chart because that gives me a good example. I don't like using the 1-minute chart because I call the 1-minute chart like the heart attack, the stroke, the 911 call, because literally you could have a huge buy or huge sell and you're sitting there panicking and it's a little too hard to trade on the 1-minute. So I don't really enjoy trading the 1-minute. I like to take the 5-minute because that gives me a better understanding of like where the tape may be going. Now you hear me a lot say like, what's the tape? I always say read the tape, how the tape's being, study the tape, watch the tape, see the price action within the tape. A tape is basically, picture as it like a movie or a musical, or you're watching something all day long and that's sort of building out a storyline. That's how you can refer to it sort of in trading. So the QQQ is basically the NASDAQ here and all the big tech companies, mega tech. So as we shot at 9:30 out of the gates here, right? And I want to compare you, right? So look at the QQQ. Friday we closed around 260 per se, but the lows Thursday were 254. Right, so the QQQ actually outperformed in terms of the last 2 days because it closed higher than its lows on Thursday, right? Now, if we look at Tesla, Tesla broke through the lows Thursday and closed lower on the entire week, right? So that is bearish price action. That's from a holistic view. That's from a one-day view. I'm going to actually show you guys deep in what I saw on the tape Friday. If you were a premium member in the Discord, if you follow me on StockTwits, follow me on Webull and social media, I posted a couple times. If we break 212, 214 on Tesla, watch out for 208 pretty quickly. If we break 220, look for 216. If we break 208 on a Friday, you could flush out and liquidity flush end of day. All three of those theses legit played out to the T on Friday. 3 for 3 on those perfect reads, and I'm gonna walk through how that actually worked. I'm not a magician. I don't do science. I don't change the world. I just read charts, and you can feel it through the tape. So I'm gonna walk through the tape here. I want to compare the QQQ and Tesla. Okay, so out of the gates, QQQ had a nice a big face rip rally here over half a bit, and Tesla didn't really get that. It was choppy out of the gates, which basically means algos and MMs didn't know where to go with this one. We opened up at around 222, 224 zones, hit a high at 226, got faded. And then right when the QQQ started selling off, Tesla just literally fell off the cliff. And I want to talk through price action first, and then I want to talk through where you'd want to enter, where you'd want to exit. And I want to talk through, there's been a lot of questions in the Discord around stop losses, etc. So what's good to know is, stop losses are really tricky in this market. I'm going to talk through that, but first I'm going to cover the price action standpoint. So I put a bar here for Tesla just to show you guys, right? So this bar, you get a 1 bottom, a 2 bottom, and I'm looking at the wick. I call these wicks. So when I refer to wicks, these wicks are a really good point of like where things maybe got bought up. So like the bottom wick was 218 and then it quickly got filled to 220. See what I'm saying? We have a triple bottom and then a quadruple bottom with this wick. Once we broke 220, that's when what happened is a lot of stop losses started getting triggered at 220. And then new shorts start to pile on, and sellers and algos start to bring it down because 220 was a support for basically the last 12 to, right here. See this top right here? It's about a support for the last 2 days. And it held above it pretty nicely. Once we broke through it on Friday, that's when the shorts came in. And once it broke 220, you then target 216. Why 216? 215, 216? Because right here, there was some demand buy zone power there. There was some demand buy zone power here, here, and here. So that all goes. So then once you break 220, your first target on the short, so this would be a target, right? You'd target 216 on the short. And if you're buying put contracts, if it hits 216, that's probably where you want to scale some out, because guess what happens? If we hit 216, we then could bounce up this way, right? Which we didn't. It was a straight line rejection and continued down, which we're going to talk through in a minute. But we could have bounced and made a U-shaped pattern and retested 220. Now, if you're shorting just shares or you're buying just shares, it goes both ways, guys. So I'm going to take the example of we're shorting Tesla Friday, right? You break the 220, you go short, maybe 219.80, 219.50, and you short down. Now, where would you put a stop loss if you're short at 220? Where would you put a stop loss? If you had some size at 220, you bought some puts at 220, where are you going to stop loss? I'll tell you where you're going to stop loss. If I'm taking that trade, I'm going to put my stop loss maybe right here about 221, a little over 221. Why? Because if we break 220, come to 216, make a U-shaped pattern, break over 220, we're probably going to retest those 226s. But guess what? I'll be stopped out, but right over the 220 line. And that would show a strong reversal. But we didn't see a strong reversal, did we? No. We saw a rejection on the 220. It tried here, and then it just straight shot down. We tried to consolidate for about 10 minutes, and about 5 minutes here at 216, and then you just got a big flush, about a full percentage move down, right? And then the QQQ started consolidating. If you look on the left side of my chart, Tesla's on the right, QQQ's on the left. QQQ made a nice little consolidation move here. Why? That was a technical analysis point right here. Thursday, we built a nice little move at 264, 265. So the market said maybe we get a bounce. I even tried playing this on a bounce. I played NVIDIA calls in here, 265 on the Qs. And we actually got a little bounce. And I sold my calls, 4 or 5 grand profits into the calls on this. Not much, about 30, 40% move on a Friday. Great move. Sold 4 or 5K worth on NVIDIA right into here, right? And then we rejected so hard. When you see this big red candle come in right after a huge green candle, that shows you that there's sellers there that won out. There's a technical stand pivot move that still wants to come down. You can feel it through, as I'm going to refer to this today, is the tape. When you continue to see these heavy red bars coming, larger than the green buy candles, and quickly and swiftly to the downside, creating new lows, lower lows on an intraday basis, we know that we're probably going to continue lower. And when we saw this rejection, that was a quick basically wink or look at traders saying, okay, hey traders, we're going lower. We want out. Sellers want out. Algos want out. So we saw this rejection midday. And if it didn't pivot and continue up, which I think buyers wanted to do and retest, 270 on the Qs, and then maybe Tesla retest at 220, we didn't get that. We kept breaking down. So once we broke the QQQ at 265, that's another short opportunity. You break 265, what do? You go short on the Qs. Then you put your stop loss maybe a little above 265, maybe 266. If it breaks on the U-shape, you stop out. But guess what? Now you ride the baby down. You ride this puppy down. Where's the next support line for the Qs? Next support line for the Qs basically is at 258. We didn't get there Friday because actually the NASDAQ and the QQQ outperformed. I know it's down, 3%, but it actually outperformed in a price action standpoint because it closed above Thursday's lows. The SPY barely closed above Thursday's lows, and the Dow barely closed above Thursday's lows. So it gave back a lot of the gains. Now on Tesla, go back to the right side here. I'm going to do a full image here so you guys can see. These are Thursday lows, and we broke right through it. Now, I did a lot of posting at around 214, 212 zones right after I saw this wick right here get fully rejected. And then we just broke to a new low of day in here. And see how these green candles follow like 5 minutes, but they're like wimpy candles, right? They're like 0.2, 0.2, 0.2 every 5, 10, 15 minutes. And then bam, a half a candle sell comes. So we just kept selling and selling and selling and selling all day. But the short trade was here. Once we broke the 216 from the 220s, you now move your stop to 216 from 221. So as we're riding this ticker down, we're just moving our stops down. So, because these markets are so violent, guys, that when you move your stops down, right? So if you're in options, right? Maybe you're doing lottos or next week, you're now up 20%, 30%, 50%, 100%, whatever you are. You're just moving your stop, with the ticker down, right? And as we continue breaking to new lows, now your stop loss maybe is here, where the new resistance would be, which used to be older support from the last couple of days. So now we're using old support as new resistance. So now we want to move the stop down with the price action of the ticker. This is what brilliant and all famous or all really professional traders do. In terms to maximize that profit capability, you want to be moving your stops. You want to be calculating that risk, right? So now if we just rock it out of nowhere, you stop out, but you still make a ton of money and make profits on the way down, right? So, for example, right, that's how you want to be doing it. So the 216 broke on Tesla. What do you target next? The next move, the next closest support is 208. And that's from 2 days ago. Look at this. And that was a straight line down yesterday. It was just straight line at 8:30. We'll drop 4%. So 208's that's a big demand zone for Tesla. It's been there for 3 or 4 months. It's sitting there. It's in front of every trader's face. If we don't bounce at 208, traders know we're going lower. And guess what happened on Tesla? I said it for about 2 hours on Friday. I kept posting, watch Tesla. If we get a liquidity flush and we raid through the 208 line, it could be an algo flush and it could get ugly into Friday's close. What happened? The last 30 minutes to an hour of the market, Tesla fell off a cliff. The Friday contracts ran 300, 400% into close here. Right when it broke 208, I saw the whole group started banking on the way down, and this thing just fell off a cliff. It went from 208 support, and then we went to new 52-week lows, I believe, in here. Not 52-week lows, weekly lows in here. And then I don't know, what do we end up closing with? It's 203 and after hours, right? So that's a 208 to 203. That's like a $5 move, guys. About 204. We got into the 204s. So that's like a $4 or $5 move. And on a stock like Tesla, $4 or $5 bit move is like, we on the options expiring next week, that could be 20, 30, 40, 50% moves. So these are drastic moves to the downside that came, right? So that's what I call price action. Then I look at the daily here, and this is what I'd say: Tesla underperformed the market because of its price action. But this is what I look for. I love range. As a trader, guys, we need to embrace range percent moves. You want stocks that are moving up and down quickly. That could be options, that could be large caps, that could be small caps, that could be indexes. When there's big range days in the market, that's when traders can make the most potential sort of money or bang for their buck. Okay. And that's when you get these big market moves. That's when you get option contracts running 20, 30, 50, 100, 200, 300, 400, 500%. I'm not shooting for grand slams. You make 10, 20, 30, 40% on an option contract, take the money, run, take a breath, and then wait for the next chart play to come. A lot of people are jumping in too early, trying to buy dips, sell rips, and it just becomes a shit show. But guess what? Just use the charts to your strength. If the 208 demand fails, you sell the puts in here, you make the profits. If we rip back in reverse and we break above 211, 212, great. Then we target 215 on the upside. Trade to your advantage. Trade that technical analysis. So that's the Tesla chart I wanted to show, because that would be underperforming price action. Does everyone get a good understanding of price action? If not, get a pen and paper. I'm going to try and answer some questions in 5, 10, 15 minutes after I go through another example. So that was price action. I also talked through the stop losses and entries, right? You want to be buying demand zones and dips. So it wasn't wrong for a bull or a bull to buy at 208. Why? Because shorts are going to start covering at 208. It's a key pivot point on the chart. Let me guys show you the daily chart of Tesla, just real quick. And you can learn so much about just studying one chart and one day's action. I don't need to talk through 100 things. I could do 10, 15 teaching and coaching points right here on one chart. So look at the 208. I have the bar here still, guys. I have the bar. These bars are from months ago, and they're still here, and they're still showing us that charts don't lie. And this chart is, this bar that I have, this line, is a demand zone for Tesla. You got a 1 bottom, 2 bottom, 3 bottom, 4 bottom, 5 bottom, 6 bottom, 7 bottom at 208. Guess what happens? We're starting to wick below the 208. Where is Tesla going to go if we continue selling? I'll tell you exactly where it's going to go. We're going to move this bar. We're going to move it all the way down to 180, 185, 188. That is the next level for Tesla. So if we sell off this week on earnings, or we sell off, there's more fear, whatever it is, your next buy zone would probably be 180, 185. Maybe you get a bounce to 204, 206 again, right? Now we break below 180. Oh gosh, we're going to pull in the video move and we break below 180 and this is going straight to the 140, 150s. There's some analysts that think 150 is a good buy zone. Maybe they'll be right. I think that's a big shot though. That's another 20, 30 down. So I'm thinking the 180, 185, 188 could be a short-term bottom for Tesla. Keep in mind that PE is pretty high. If we do go into a recession, maybe it continues to sell. I don't know. Tesla's the wild, wild west. It's one of the most liquid option contract names out there in the marketplace today. So that's Tesla, right? I wanted to just walk through that because there's a lot of great examples for that name and what happened on Friday following that tape. Hopefully this is really helpful. I know there's a lot of small cap traders in here as well. So I want to bring up a small cap trade and I'm going to talk about positive price action. So now let's talk about if we're buying a ticker, where are we going to put the stop loss? Where are we going to target profits? So let's talk through the ticker PEGI. These are one of the best charts to possibly trade in small caps. I have no idea where this ticker will go. I don't know if it's going to go to $2 or $30. I have no idea. But what I do know is that there has been strong price action for the last probably 15 to 20 days. And I'm going to walk through this price action, okay? This is what I call a pop consolidation, pop consolidation, pop consolidation, pop consolidation. So look at this chart. Ready? Follow it along with me. We're going up, down, okay, consolidate at new highs, right? So here we go. Let's just say, I didn't buy it in here. I actually bought it at 2 and we sold the 250 break and, now it's at 7. It's 200% higher than where we alerted it. I played the $2 break and I'm going to talk through where my action was. This was probably 2 weeks ago or whatever it was. But I just want to talk through the chart, positive price action, right? If you were trading this, and this could be an intraday setup or a weekly setup, or if you're a swing trader, this is a perfect stock that you probably could have swung. But these are charts where I want to show you guys, if you start to see these patterns in the future, these are stocks, or, this is a chart that you see and visualize with your eyes and you go, oh shit, like this is what Spud was talking about, or this is what a really bullish price action tape looks like. This is where I probably want to buy the dip, set my stop loss at the low, and then maybe try and push for a new high break, move my stop up again, and then ride up, and then bang, we want to sell into the FOMO candle. And I'm going to talk through where you want to sell, where you want to buy. So here we go, right? Okay, this pops on the 4th of October, about 2 weeks ago, right? Then we get a consolidation here. Okay, I missed the run. I'm a trader. I missed this run. Beautiful run up. Missed it. Okay, fine. Maybe I'm a trader. I'm a day trader. Okay. Then I see this break, this green candle. See this top wick was like 155, 157-ish. It breaks above that. So me, I'm a momentum trader, right? I say, okay, let me jump on that. I'm going to sell a move to the 190s. Right? That's a 19, 20% move in here. I quickly scalp 15, 20%. I sell. Then we see some profit taking from down here. We finally see some profit taking. That's a 40, 50% move, right? Now, guess what? We're now consolidating here at the previous high of the day break, which is in the 140s, 150s. So we're making higher lows. We're making higher lows, right? So I'm going to keep moving the chart. Let me show you guys. This is a great example, right? Now we're making a higher low here. So now if you're a trader, you're buying here. Maybe you're putting stop below this wick here at about 125. You bought 130s, 125. Guess what? It doesn't hit, which is great. Now we break above the highs at 190, right? Now we're consolidating in the 180s, 190s, which is great. This is a beautiful price action, bullish price action stock. Now we have higher lows. We broke above the 188s. Now I'm saying, okay, 2 might have been a target. Now let's raise that price to maybe 220, right? So now 180 is your base now, the new base. And once we break above the 190, now I'm buying the break and I want 220s. I want another 10, 15, 20%. Now we're making another base here at the 2s, and then we break above 220, bang. This is where you want to be selling. I'd call these the FOMO spikes. This is from an intraday, right? 13, 15, another 50. That's a 30% move in 15 minutes. You want to be buying in here, accumulating, consolidating, bang. Sell the FOMO rips. And everyone's saying, moon, oh my God, we're going to the moon. This thinks this is that. That's your cue to be like, okay, probably should take 50 to 100%, maybe scale some out here. You want to be selling into FOMO panic buying. That's what I call it. This would be a FOMO panic buying scenario. You want to be selling this, accumulating dips, accumulating on the consolidate, and then you want to be selling the FOMO, buying the fear on the consolidation when everyone doesn't know where it's going to go, but you're reading the chart and you see it's holding and forming a base, and then you want to be selling into the FOMO. Now, guess what? You missed a run here. Okay, fine. You missed a 4-day run in here. Guess what? The name's not done. Because guess what happens? We finally sell off a bit. Guess what happens? Those traders said this thing is showing strength. It's showing range percentage. What do I want to do now? I want to get in. How do I get in on this name? That's what people are saying. How do I get in, right? You wait for the dips back to 204s, 5s. You never get it. So then you see that it bounces hard off the 210 zone. You're saying, okay, this name has strength. Maybe you buy some here, put the stop at 202, 205, 210 zones, keep a 5-10% stop. Then guess what happens, guys? We make a full U-shaped recovery. We now break above that wick again at 220. We explode into the threes. Now we explode back into the threes off the U-shape, right? Now we break even in new highs. Once we broke this wick, now you get new momentum trades saying, wow, this is strong. I can maybe sell in the 350s. So now you have another 10, 20, 30% move, right? So now you have new people scaling out that bought in here or selling here. Now you have new traders coming in and buying here, selling here. Now guess what happens again? You get it again here. Consolidate. Doesn't break. Shorts are saying, let me break this. I want to break this and push this back to low twos. They don't get it. What happens? Huge candle squeeze at, this is the morning at pre-market, and it gaps up pre-market above this high again. So now people are buying the 350 break. Now traders are saying, I'm going to buy 350. I'm going to try and sell in 455. Guess what happens? They buy 350. New traders come in. Now they sell the next FOMO break, which is in the 4s, right? And then you get this push. Then you get the ultimate, I call this the final squeeze and pull push. And this is just 8:15 all the way to 10:15 in the morning. And we get a $5 to $7 move. That's a 50% move in 2 hours. And this is where I called this sort of I'd call this the high for now. This was the FOMO high. And sort of a lot of people took profits from, I would probably imagine anything above this horizontal line, people sold 50 to 100% move in here. A lot of these people probably scaled some out. These guys under this horizontal line might all be out. New traders in here sold this spike. Now, probably had some shorts who knew that you see a triple top, 5 top, got rejected 5 times. The new highs on the all highs here for this name would be about $6.60 to $7, $7.50. That would be a zone where you need some serious volume to push over this. So if this name consolidates now around this base, above 480 to 5s, you might see a retest of that 7 before maybe fading back down, or maybe it fades a little here and breaks out above the 8s, 9s, 10s, 11s, 12s. So this is what you'd call bullish price action, and this is what you want to look for. Ready? The ups, the down, consolidate. The ups, the down, consolidate. The ups, the down, and that's the pattern we want to look for. We use that pattern. We want to use that in small caps. We want to use that in large caps. We want to use that for options, because then all you have to do is just trickle your stop loss, keep moving it up, right? You want to be selling the resistances, selling the resistance pushes, selling the new highs, You want to be stopping out when it breaks down below a support level, right? So for example, if this ticker breaks below 5, you might get a move now to 420, 430. So that's another 10, 20, 30% down. You don't want to be holding the bag here. If it breaks below 5, you probably want to lock your profits or take a small loss if you bought high, right? That's all about capital, sort of capital risk, capital management, whatever you want to call it. And that's how you maximize your profits, but also minimize those losses as a trader. You can win 60, 70% of the time as a trader. You're going to do incredibly well long-term and do incredibly well in these markets. If you keep those losses tight, you could have 15 losses a day and one winner, but that one winner is going to be bigger than all your losses combined. So that's what really good traders do, and you're going to see that along the way everywhere. But that's Peggy. That was a small cap name, and I thought that would be a good sort of coaching and teaching standpoint for you guys, and hopefully that's helpful. But I want to spread some time, and now we've talked through the price action, how to read the tape, how to analyze it, how to see those candle bars coming in. As I say, I really like the 5-minute charts from an intraday. If I'm looking at a multi-day call out, hey, I'm buying Peggy at 4, I'm looking for 5 or 6s, I try to utilize the 30-minute, 15-minute, and then the daily chart. Those are sort of my favorite intervals for multi-day trades. For longer trades, if I'm buying January calls on stuff that it might be at, so for example, right, here's a good one. Here's a really good one, guys. And everyone's short on this one. I think there could be some potential end of year on a ticker ETF called ARK. You guys probably know ARK. It's Kathy Woods. It's down 79% on the year. It's getting absolutely decimated. But guess what? The selling is kind of slowing down. If you look at the weekly chart, we're kind of in this 1 bottom, 2 bottom, 3 bottom, 4 bottom, 5 bottom, 6 bottom zone in these low 30s. I could easily see this name bouncing to 45 by January. And so, if I'm seeing that, that's probably like maybe a January call you want to maybe try. If the market bounces, this could bounce pretty quickly up 10, 20, 30% in a blink of an eye, and no one would really even know. And this is sort of a bounce play off the charts. Now, if we break below the 30s, we're going to see a push all the way down to 28s. That would be another demand zone to try to bottom tick this. Now, keep in mind, these are 4 or 5 year lows, so it's not the worst entry. The ARC complex ran all the way to highs of about 160, 159 here. Let's just say even broke down here. Let's even 120s. So that's 60, 90, that's 300% upside from here. Obviously, it's probably not going to go back there anytime soon, but we could get bounces along the way into the 40s. And that would be a 10, 20, 30, 40 bit move on a January contract. That could be 100, 200, 300% move, right? So, I'm going to start to maybe try and bottom tick this with some small size. I'm going to look at the January 45 calls on ARC. I already see there's a ton of buying interest there. I already see there's a lot of open interest there as well. So traders are potentially expecting a bounce. Maybe people are hedging if they're short on this complex. But if I get another big 1 or 2 downdraft days on the ARC complex, and this is down another 6, 12, 15% on a week, I'm probably going to step into those 45 January calls because I like the spot. I like the spot, and you could sell the rally. And the reason I like 45 is because you got some triple tops at 45. So traders might bring it there. So that's sort of what I'm looking at. So keep an eye on that. That's just another teaching point. That's how I look at a long-term option perspective. So if I'm seeing that, those are potentially the levels that I'd like to test out. So I'm hoping this is helpful. I've kind of talked through small caps. I've talked through large cap. I'm talking through options, right? And options, if you guys are trading options by the intraday or options, I know a lot of people are new to options. It's great. In this market, you don't have to use any size in these options because some of these contracts are moving so fast, so hard. Don't overstress yourself. You can use very small size in options and make really nice percentage gains on your account. Just keep those stops tight, right? Keep those stops around where you see the charts, what we just talked through, and then use that. Guess what? If your stop hits, but you had a great entry and you didn't have a good exit because the stop hit, okay, that's part of trading. You're going to lose trades. In this market, the best traders are losing so much. They're losing all the time, but they're great traders because they keep their principles, they keep their strategies, they keep their rules tight and intact. If you planned and executed on your strategy, guys, but you failed to trade, that's okay. That means you strict to your rules. Don't keep your heads down, keep your heads up, because that means next week or the next day or the next hour, the next trade you make, and maybe you could hit a couple in a row because you stayed strict to your same strategy that works for you. And so my thing is stay optimistic, believe in your approach, and just continue to stay confident in these markets because they're going to test you emotionally. And that's when traders and that's when you hear those numbers, 90% of the day traders fail. And I would tell you, in my experience, I failed a zillion times. But it's the emotions that get to you that can really continue putting you in a downward spiral. You need to wake up. You need to study the charts, use the charts to your advantage, understand the tape, and really study the price action, and then slowly trickle into a thing where you have an advantage in the market. Okay? So that's one of my other favorite picks. I like the ARC complex maybe for a bounce, multi-month bounce. And I'm not looking for like a huge bounce, guys. This is an ETF index. If I could get a 5, 10, 15, 20% bounce over the next 3 to 4 months, that would print huge on a January call contract. Another secret name, highly speculative, very secret name that I see crazy option flow on this is CHPT. Now this is one I'm giving everyone out. This is one you guys should study. This is sort of my secret little EV watch. And I always watch this because this name seems easy to be pushed up and easy to be pushed down. And it seems like a trader's favorite delight in terms of day trading. This is CHPT, charge point charging. And so what they have is they have a huge broad range of EV chargers across the nation, growing very rapidly. As you can see, the stock ran all the way to 40s. It's back down to the 12s, but it made a beautiful run. I'm going to put this on the big screen here. It's made a beautiful run on the daily off of this bottom around 10s. Yeah, it bottomed at 8s. I wouldn't even count that. The 10s really had some good support. It's ripped all the way to 20, guys. It's got almost to 20 here. So we have a down, fill, a down, fill. So we have a triple top at 20. Go look at this name, CHPT, guys, when you have time tonight. Look at the January 23 $20 call volumes. It's outrageous. I don't think I've ever seen this much open interest. This is my secret pick for the next couple months. Keep an eye on this name. There is so much call interest at that 20 strike. I don't know if someone knows something. I don't know if someone's so short that they bought a block of 20 calls by January in case the stock runs and they're hedging. I don't know, but there's so much open interest on that 20 strike. And they were all bought between the low ones in terms of the average share, in terms of the average cost of those contracts. And those contracts, I believe, are trading at, is it 47 cents now? Something really cheap. So you're getting in 50% below where they bought it. So if this name continues to sell off over the next couple days or week, another 5, 10, 15, 20%, and gets down to these 11s, 10 zones, I might try some $20 calls for January or something, maybe $15 calls. Because if this name shows you that on the daily chart on this big bear market rally, guys, this name rallied like 20, 30% within like 5 days. So it has a ton of range. And those options seems to be really flying up and down on the downside. So this is an interesting chart all the way back to 2020. There's no direction before that. I think it maybe was probably an IPO in 2019. It looks like maybe a SPAC or merger. I don't know what it is. But those lows were about $10. So you're getting in basically cheaper than I would say 80 to 90% of everyone who bought it with the last 2 or 3 years. And if you believe EV is the future and you believe that market's going to get bids over the next couple months or years, this could be a name for a speculative long-term portfolio. The market cap's around 3 or 4 billion. But this is one I'm eyeing on the long-term portfolio. I'm still mostly 90% cash, but I might try play some call the upside, maybe exercise some. I don't know, but just keep an eye on that strike, guys. I did some studying over the weekend, and I just thought it was very bizarre to see all that open interest on 20. I have no position on this name. I'd like to maybe get in on this name this week. If I get down in the 11s or 10s, I'm going to soak some calls in there because they're going to be dirt cheap. And if this thing makes a move to the upside, 10, 20, 30%, those things could really, really run. And so that could be a really nice trade for the end of the year rally. Maybe Christmas, Santa Claus rally. I don't know, whatever the hell you want to call it. Could get one of those in the market. So that's a name, CHPT and ARC. Those two are like they're just, a lot of these names are just so oversold, guys. 70, 80, 80% plus. I mean, it's drastic moves. Any slight positive news on any of these names, and they could be up 20% overnight before everyone wakes up in the morning. So you just don't know. And that's why it's really hard to bottom tick a lot of this. But my suggestion is you don't have to go all in with shares. What you can do in these markets, guys, and I teach all these students and I teach my members this on a daily level, weekly level, guys, you can risk capital from upside and downside protection via options. You don't, if you have 100 grand in your name, you don't have to go 100 grand all in on these names. It gives you unlimited risk to the downside or upside here, whether you're short or long. You can buy, 10 grand worth of calls that expire 6 months out. And guess what? If you get the pop, you can make money to the upside without risking much of your capital. Does that make sense? You can always do in-the-money calls, in-the-money puts, right? So if you say, oh my God, I think the market's really going to die over the next 2, 3, 5 weeks, I'm going to buy some put protection. You could buy 5 grand in puts and still have $95,000 cash, right? So there's ways to play this market without utilizing a lot of your capital. And that's how I think in a volatile market like this, it's the best way to play because you won't lose as much money, but you also, won't risk as much. Therefore, you can make profitable trades up or down. And so that's how I'm trying to trade this market through options. You guys have probably seen, if you've been a premium member, if you've signed up and you've been in the group for the last few years, you guys know it was heavily small caps at first because that's what was hot. That's where the price action was. That's where the liquidity was. It was easy to make hundreds of dollars or millions of dollars in small caps the last couple of years. Now that market is slowly settled and it's just, there's no bids there. There's no liquidity there anymore. It's algorithms and nothing's really moving much intraday. That's why I've branched on and I want to go where the traders are going, where the range is, where the liquidity is. And right now that's in large caps, options, and indexes. That's where the money flow is. So I follow the money. Where the money is, that's where I go. I follow charts. I follow price action. I'll come back to small caps. If small caps gets hot and Santa Claus rally and things are going 2, 3, 4, 5x, I'm there. I'm front and center. I'm buying those dips. I'm selling those rips. I'll be there. You'll see the alerts. So I follow where the market goes. I follow what's hot. I follow the trends in the market. And that's where I want to be as a trader. If you're limiting yourself to one specific tiny niche of a market, you're missing a lot of other opportunity, but you also don't know where the markets are going to be in 10, 15, 20 years if you're doing this for a career. So you have to be versatile. You have to learn how to trade everything really. And the more you can do that and then find a strategy that works for you, and the more you're going to have a likelihood of being successful. So hopefully that helps. I want to jump into some Q&A now. We have about 13 minutes left. I appreciate everyone jumping on. Keep in mind, our tech guy is probably posting on the right. You guys can join the Discord. It is a premium Discord. I give out all the trade alerts and ideas in real time. It's very much different than a lot of other Discords you've probably been in who just do entry, exit, blah, blah, blah. I like to talk and analyze what I'm seeing, how I'm feeling about it, and I do a lot more emotion within the actual alert itself. So you guys can come check that out. That's in the Spud Zone Discord. We also do tutorings, chartings. We have a very, very active options team. A lot of people use the community just for the options trading floor. We have a ton of folks, really, we have some crazy people who've turned a very small amount of money into a very large amount of money in this crazy market. A lot of successful traders and experience there. So definitely come check us out, check it out. But I want to jump into Q&A here. So if you guys could start posting some questions on the right side of the handlebar chat, in the chat window to the right. I will start basically looking through some of those questions, and I'm going to try to refrain from pulling up specific tickers. So try and maybe keep the questions generalized, but I'm going to try and answer them as best as I possibly can. This is really the best part of the session when you guys can answer questions, ask questions, and sort of get some answers for it. So go ahead, shoot away, and I'll start putting in some of my best responses if I can. When you are Warthog, when you are studying after hours and/or screening, what criteria are you looking at for targets? So for targets, I'm looking at like a daily resistance point or a daily entry where there's demand zones, or just targets from that, and that's how I'll create a trade idea. So before I enter and exit any trade, Warthog, I'm already putting the targets in my head. I do a target 1, a target 2, a target 3. For a really simple scenario, if you're trading a small cap at $1 and you buy it at $1 and you put your stop at 0.9 or 0.95 and keep it tight, right? You're targeting maybe 10%. I always do 10%. That's always the target 1, 10% higher, because that's just a natural selling point for traders and scalpers. 10% is like in a head. So like maybe some people scalp at 8% knowing that maybe it won't get to 10%. Second target's usually around 15 to 20%. And that third target, if you're moving that quickly on a specific ticker or option, I'll probably put that third target around 30 to 50%. And that could be an intraday move on an option. That could be a multi-day move on a penny stock. If the price action is strong, or, that could be also a short to the downside. So, that's how I look at things. And that's the criteria I'm doing before I make a trade. I have my entry, I have all my exits planned, and I have my stop loss in place. And I stay patient. And when I get that entry that I want, I then make a move on the stock saying, okay, if it hits my stop, I traded well, I saw the setup, it looked great, but it failed. That's a loss, not a problem. I'm not mad about that. I move on to the next trade. So hopefully that helps, Warthog. 358, looks like no name here. How does Gamma affect option contracts? In terms of options, I do play some high risk weekly stuff with Gamma and Theta and all that, but the best sort of knowledge I've learned through all the years of trading options is honestly buying in the money, no matter what it is, by the weekly, monthly, or multi-month, or you're buying yearly options way out of date. In the money can never hurt, because that theta is not going to go down as much. Therefore, if a big move happens not in the direction that you're betting on, you're not going to lose too much because you're buying in the money. If you're buying out of the money 10, 20, 30, 40, 50% above where the stock might be, you have a higher chance of not making money on that contract. But if the move happens, you're going to make way more than you bought on the in the money. So I always try to do in the money because it's just safer. Who do we have? Taylor Aldrich, been here since 2021. Best $10 a month I've ever spent in the Spud Zone. I appreciate that, Taylor. Thanks so much, and I appreciate being a loyal customer and member over the years. Thanks so much. Appreciate that. Hello09, thanks for this excellent session. I have a suggestion here. Instead of using 2 rooms, 2-day trade alerts, option trade, why can we only use 1? We can. I could start thinking about some consolidation within the alert channels. I try and keep like day trades and option trades, but maybe we could combine something or thing. I'll talk through some of the other mods and see how we do. PM, hi Spud, how do you check algos for sell and buy signals? Well, PM, if you scroll back in the video and look through my Tesla 15-minute sort of tutorial I just did on the Tesla price action Friday, you're going to see where the algos are actually selling and where they're buying. At Tesla 208 on Friday, that's been a 208 has been the low for the last 3 or 4 months. So that's where there was demand, and that's where you see algo flow start to come in. where 220 broke down, you actually saw the algo selling, and that's where I'm following that algo down. So now I'm seeing heavy block selling to the downside, following the algos to the downside. That's where I'm taking a short and following it down. Then when we get to 208, the algos are actually now covering and they're starting to buy some. So it's all a game of like where the demand zone is for a robotic algorithm and then where the sell zone is for a robotic algorithm. Hopefully that makes sense. You can see it within the price action. Just if you missed the first half of the video, I would check out that. And you got it. Do you use SMAs? Not really. I honestly use MACD, VWAP intraday a little bit. But everything for me, guys, as I said, I don't get all hung up on all these indicators, blah, blah, blah. You see YouTube videos and all these fools, gurus, whatever the hell you want to call everyone. And they use 100 indicators. I mean, that's just, to me, that's just chaos. I just follow price action. I use 5-minute candle bars. I check out the price action. I see how big the candles are. I see the volume on the tape. I'm watching the supports and entries, and I keep it very simple. Don't make trading too difficult. Just keep it simple, intact, have a plan, have a strategy on the trade, and then just execute it. So I try to stay away from a lot of the indicators. 200 moving average is what you should use because that's a great that's an area where hedge funds, index funds, mutual funds, pension funds, large whale players within the space, that is what they use in sort of the on the main street, on Wall Street. Like that's the bread and butter, 200 moving day average, 50 moving day average. And when you get below those, it's an automatic sometimes buy or sell for a lot of these funds, just off technicals alone. So I do recommend using the 50-day or 200-day if that's helpful, guys. Alejandro Maya, what are your best volatile indicator or strategies to avoid choppy flat markets? If a market's super choppy and flat all day and there's no true direction or you can't really get a rhythm going, it's best just not to trade it. Find a new trade, find something else to focus on, or just play super, super small. You only want to play big on the days where the trend's super strong and there's not much movement. So Friday was a great example of just straight down, no bounces. You just want to move the stops down, ride the wave, ride the wave, ride the wave, the never-ending wave. And if we got a huge bounce, that's when you stop out. But we never got one. We just kept going lower and we sold off for about 4 to 6 hours straight. So, if it's choppy and it was just a flat day, chop, then rip up, then dump, then rip up, then dump. You don't want to, no traders wants to trade. That's how you lose money. Just wait for the trend to come to you and wait till you feel that you can see the price action to your advantage. Roman, do you prefer ODT for options or weeks, months out? Honestly, I take a lot of losses on the 0 DT for options. I don't take the ODs. I try and play, like, for example, Tesla. Like as it's failing all day long on Friday, buying $200 puts next week for the scalp is like a great example. Like you're seeing the negative price action, but if it rips on a Friday, you get crushed on the ODTs, but you won't lose as much on the next Friday, right? You could just continue and monitor that stop a little easier. You're not going to make 500% on the contract like you would on an ODT, but you might make 100 or 200% if the move really happens on that Friday. So you're still making an awesome percentage return on that trade. So I do like to play weeklies, like out a week or two, even monthlies. If I'm using like bigger size and I don't want to really necessarily use, I'll buy like a monthly one because if the move happens, for example, that crazy NVIDIA call out I had about a month ago at 188, and it was a really scary trade for me at 185, 188. Our team was buying 170 puts. And we were scared. I stopped out. I lost like 5 or 10 grand on the trade because I kept my 20-30% stop in. The next day, what happened? Predicted the entire move. That NVIDIA dropped from 188. I don't even know where it's at now. I think it's sub 120s. I mean, that's a 30% downward move. That's just from 2 or 3 weeks ago. So, that was a huge call that I missed time by 12 hours because I had strict parameter and losses. But I was obviously pissed off because I missed, an awesome opportunity to make an incredible amount of money on that trade. But it happens. That's trading. You could be a day late, day early, hour early, minute early, and miss a lot of the trades. So, that's why you got to stay strict on some of those parameters. But I do like multi-week options is sort of my favorite. Taylor Arders, Spud, what do we got? Spud, any updates on short-term bottoms? Any day soon bear market rally again? Taylor, keep an eye on that 348 on the SPY. Went through the SPY technicals in the beginning. So keep an eye on those technicals. 350, 348, 330, and 300 are your spots. And those where I think are opportunities where you might be able to start getting bear market rallies into the end of the year. If we hit 350, or maybe we hit 350 this week, or maybe we hit 330. 330 I think is a spot where you could buy 330 and sell 350, 360. I think 330 is a really nice opportunity down there. And in terms of updates on bottoms, no one knows. Warren Buffett doesn't know where the bottoms are. No one knows where the bottoms are. You just got to use charts. You got to play price action, and you got to, it's hard to bottom tick bottoms. So if you're looking to build out a long-term portfolio, maybe you want to use 1/6 of size. So if you want to buy a ticker tomorrow, right? Maybe you use 1/6 on the dip, and then maybe 3 weeks later it dips big again. You buy your second sixth lot. Maybe in 2 months it drops to all-time lows. You buy your third sixth lot. So it's basically like dollar cost averaging into a play. And then 2, 3, 4, 5 years out, you could be up 20, 30, 40% on a name, right? Or 50 or whatever the heck the percentage is. But that's how I'd probably look at this kind of market. I wouldn't be all in on and trying to bottom tick and getting lucky on a bottom dip, because no one can time this market. It's too emotional right now. It's algorithms based. There's billions of dollars coming offshore. It's a crapshoot. So you can't time this thing. You just got to play the charts and maybe dollar cost average in here. In regards to news and technicals, which comes first? Does the news dictate, or does the technicals dictate the news? Seems like they're intertwined. It's hard to say. It seems to be different by the week. Honestly, in my opinion, I feel like we've been hearing the same news over and over for the last few weeks, and the market keeps going down in the same news. And I think that's why you saw Thursday, that huge monster reversal. It's the third biggest reversal in the history of the entire stock market, hundreds of years. So, that was pretty wild to see. Now it's just on the same bad CPI numbers, which, we all know. It's not new news. So what advice can you give if you have a small account? Is it better doing small caps or options trading? I built a really large account off of small caps trading, but that was years ago. Gilby Tableson, I apologize if I'm saying your name wrong. But right now there's a lot of money in options, so I've been sort of sticking to that. And you don't have to use much size if you want to learn, but definitely study. Options move really fast. As I said, if you want to stay away from the ultra volatility and you want to expect to move up or down, you may want to buy a couple weeks out. Give yourself some time for the move to happen. The shorter, the more high risk. You can lose 99% of that option contract. So a lot of accounts can be blown in options, but it also can be extremely lucrative if you do it right. What about reading the tape, Spud? Dentix, I just looked through we just did reading the tape for about 40 minutes, so just scroll back in the video. I went pretty in depth with how to read the tape. Lexus, Arias, Spud, what are the best chart patterns for reversals and candlesticks? Patterns are the best for reversals. I like the U shapes. I like a bottom, like a double bottom wick where the wick gets so bought up quickly. And that shows you that there's super strong demand on dips. If dips get bought up really quickly within an intraday level on the 5-minute, 10-minute, or you just watch, like, for example, right, a move all day long. Let's say a stock's up 5% on the day, right, and it's just holding there. Every dip to 4% rips back up to 5, and it consolidates. I would say, okay, watch for a breakout into a new high into the end of day. Then bam, you get the 1-2% move you're looking for higher, because we're consolidating all day long. Shorts are trying to push it down, doesn't get pushed down. Bang, we break into new highs. It's the same way as if you're short, like Tesla on Friday. We were consolidating at the lows. It never bounced. So what am I saying? I'm alerting. I said it 3 or 4 times, maybe 5 times over a span of an hour and a half, 2 hours. I said, watch for a flush on Tesla under 208, 210 zones. And then the thing went 300% on put contracts and the ODTs, and it ran all the way to 205, 204s. So, there's a really big opportunity for some of that stuff if you could time those calls or those shorts, right? So, yeah. Derek, would there be a time when 3x leverage ETF is a better choice than single stock options? Yes, Derek, that's a really good point. So the SQQQ is the short for the Nasdaq. The TQQQ is the bull 3x velocity one, and then you have the SPXS. And then was it the XPXU, XPUX, something like that. But you have those are all 3X, and those are really great. I like to ride those in shares when a big, a market rally may come. For example, Putin gives up tomorrow morning and there's a full peace treaty and blah, 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 blah. What are you going to do? You maybe want to load the TQQQ. You maybe want to load the ARC, because those are... What's going to happen is the names that are down 70, 80, 90% in this market will probably pop the highest, and you could get a faster return, the more high risk stuff that's just down so much, just because people said they're just so brutally oversold and heavily shorted that, that's probably the 3X leverage ETFs you probably want to step into. Vice versa, right? Like a nuclear bomb goes off somewhere in the world tomorrow, you're probably going to want to load the SQQs, the SPXS, and ride that down to get, 3X leverage. So, that's sort of how, you'd play those. And those are great to play. You get 3X leverage, but there's also a little bit of risk if you buy them shares. But As I said, it's easier to play those if if you like to just trade regular stocks or equities. And options is too volatile and crazy for you. You can just trade those 3x leverage ETFs, Derek. So and they're just easier to follow, right? And if the SPY's down 1% on the day, the 3x leverage ETF is up 3%. So it's just easier to monitor. If it's just not as stressful. So yeah, I do like those a lot. I haven't actually played them as much as I wanted to this year, but you kind of just gave me a little reminder there. I'm definitely going to look into some of those coming up. PM, thanks for your answer. I'll do some more research. Cool, awesome. Absurd Medical, what do you use to know that algo is buyer high, selling, etc., selling pressure, etc.? I see there's a bunch of questions here on this algo stuff, which is fair. I'll bring up Tesla again, guys. Just back to Friday, like you can see the algo sell through the tape, right? I showed you guys the line. I'm going to do the line again just because I keep seeing the same question. It seems that maybe some of you guys and even old students, maybe you guys can step in and help in the chat section. Here's Tesla, the 220 mark, okay, is right here. See this bottom wick, 805, it got bought back up at 220. It got bought up at 220, got bought up at 220 on Thursday, got bought up at 220. Thursday, it made high at 220. Thursday, 220 was the high here before the algo sold off at 8 a.m. So 220 is a key spot for Tesla. That was the buy and sell sort of zone. When we broke 220 on a flag, right? We have a million down, then we see a 2 million candle here, and then another huge 2 million candle. That is an algo sell down. That's a 1% almost. Now they're over half a point. So 1.5, maybe 2% move down, guys, in 15 minutes. That's a big move for Tesla. 2% down in 5, 10, 15 minutes, right? That is where the algos said, okay, we see volume flushing below this level. Now we have to sell. The algorithms come on and the algo starts selling all the way down into here. Maybe they stop selling, then we break again. Now the algos pick it up. End of day, there was no bounce U-shaped to 215, no U-shaped bull bounce right in here. Then it just said, okay, algos said, nope, no bounce. That's an algo liquidity flush. I called it at 1 o'clock. I called it at 2 o'clock. I called it at 3 o'clock. I said, watch for the liquidity washout. Everyone who was in the chat was laughing because it literally came 15 minutes after I just kept saying, watch for this. We could flush. And then Friday afternoon, we flushed all the way below the weekly lows. And we had the sort of risk off in Tesla. And it died in after hours as well. And the next level for Tesla, if you're a trader, right? We broke this horizontal line right here on the triple bottom for the last 4 or 5 months. That 188 spot's next, guys. It's going to come. It might come quick. It might come this week, 185, 188. Keep in mind, there is earnings this week, so there could be a surprise to the upside. I don't know. I don't like playing earnings on Tesla because the IVs are outrageous, and it's like, I call it just taking people's money because the move, you got to really predict a crazy move, and this is already down so much that I don't know how much lower. I mean, it could go another 20% lower. I don't know, right? I just don't know how bad or good earnings will be. So it's a little bit of a riskier trade here now. If there was no earnings, I'd say 185 puts would probably be a nice higher risk sort of technical spot where we could get that pullback. So hopefully that helps. Hopefully that helps in terms of that question. Absurd Medical, the algo sell and pressure. Giovanni Ruiz. Hey, so my question is regarding selling/scaling out. How do you manage emotions on scaling out and maximizing gains with the markets ups and downs intraday? So when my targets get hit, Giovanni, I scale like probably 70-80% of my position out. I know Harmony, our head of options trader, Archer, and some of the other options guys within the Discord, they like to sell like most, and then they let a few, they call it runners. They let some runners run. So they hold a couple contracts, maybe worth a couple $100 or $1,000, whatever it may be worth. And if those continue to run, hundreds of percentages, at least they get to make a couple more dollars on the trade. But their initial larger investment that they made, larger trade that they made, they're scaling out at their targets, but they're leaving as they call runners. I don't do the runners thing as much. I'm going to maybe start doing that. But I like to just take all mine out when I hit my targets, just because things move so drastically fast in this market. But and it's been really choppy, so hopefully that helps. Roman Lubers, you stuck to your rules. Great discipline. Yep. Yeah, sometimes you can't win them all, right? Great info and any trade ideas about NEO. The China EVs, I made a big post about them on a Saturday night last weekend, actually, the China EV names. if you look at the daily, weekly charts, these names are getting obliterated. I mean, decimated. Decimated would be the word. Actually, just decimated. They're down 5-10% a day, every day. I think what's happening is there's major selling going on. And I think with a lot of the chip stuff that's going on with the export bans to China and some of the chip stuff, and I think the way China economy's going, things are getting, housing's getting destroyed over there. I think that these EV names have pretty lofty evaluations and just sort of getting that big reset. But I think maybe some of the larger players maybe there could get a bid soon. XPEV would be one, XPEV, Neo's another one to watch, LI. Those would be the three ones to probably watch for the China names. And they all seem to kind of follow one another. But Neo seems to be sort of the heavy favorite from a trading perspective. That has the most volume, even though it may not be the best sort of growth or company to the China EV stuff. Hopefully that helps, Mason. Taylor Aldrich, nice, thanks, appreciate the advice. I'll scale and slowly watch for those levels. Awesome, man, great stuff. Aventador, will the algos and market makers ever leave retail alone? The reality is, like, they're not, a lot of retail is not trading off of levels, right? Obviously, we're smart retail. We're studying right here on a Sunday. We're looking at the charts. We're reading tapes, and we're making like an educated sort of a educated trade idea, right? Most of retail, I know they get that, they get that sort of push in the box, being like they don't know what they're doing, or they're just going to buy and sell at random times. So the best way to differentiate yourself from 80-90% of other traders is really, really sticking strict to your chart entries, your exits, and sort of the technicals that and that you can see on the tape or on the chart, or play news to your advantage. So don't FOMO or exit trades, or don't do any of that stuff unless you really feel you have a competitive advantage for some of that stuff. So yep. Thanks, Spud. Okay, for support and resistance levels, do you see last 5 days? Yeah, I like to look at the weekly stuff. So for example, right, Tesla weekly lows were like 205, 208, I believe. Sorry, 208. Sorry, it closed at 205. I apologize. 208 was the weekly low, and it ran all the way to 220s. And so when we close below the weekly low, now 205, now 208, 210 is going to be resistance this week, and 220 is like the big resistance this week, 220. So if we hit 220, that's probably where shorts will probably retry to short for more downside. But also, right, could be a breakout opportunity. If we break above 220, 225, then you probably want to look for upside into the 230s, 240s. So that's how I'd use a weekly chart, that basically the prior week. That's how I'd look at it. Hopefully that helps. Jose Claire, I got here late. Is the video going to stay? Yes, you can just, after I close out this video shortly here, it will be recorded on the YouTube channel. You just got to click. It takes a few minutes maybe to upload. But once it uploads, you can and listen all back. But guys, I'm going to stop here. We're about 8 minutes over. I like to stay strict to my time because I know people are on hard schedules. I really appreciate hundreds of you guys coming out today listening to this channel. If you enjoyed the content, you can come see all the trades live within the Discord, the trade ideas, that is. We have an awesome options team, small cast. So we kind of trade a little of everything. Wherever the markets are, we're trading it. We have a great community, a lot of active traders, serious traders only. Feel free to come by, check us out. The link is in the Spud Zone, to Spud Zone Discord. So yeah, if you guys want to follow me, you can follow me on StockTwits. You can follow me on Webull. And you could follow me. I just actually created a little Twitter account as well. Got a couple thousand followers there. I don't use it as much. I'm not a Twitter guy, but StockTwits and Webull are my two social areas where I do a lot of posting. And yeah, you can follow the charts, follow the ideas. Remember, just stay strict, keep emotions out of the game, guys, and try and trade well this week. I'm really excited. Hopefully some more volatility. Last week was pretty nutty. And it amazes me how many opportunities there are daily in this market. So stay patient, wait for your strike, make your trade, and call it a day, and wake up and do the same thing the next day. So these are sometimes once in a couple decade opportunities where you can trade this type of market volatility. It's been 10, 15 years since we've seen drastic moves like this. So take advantage of it, guys. Awesome. Take care, guys. Hope this was helpful. Definitely subscribe, throw a like, throw a comment. It all helps. Marketing works pretty hard to get some of this stuff out and some fresh content. So looking forward to going live with you guys again soon. And hopefully you guys enjoyed the monthly update on the SPY and QQQs. I know it's pretty helpful. And yeah, awesome. Trade well. Spud Zone out. Go enjoy some football. Let's go, Giants.